Good morning. Welcome to a Monday and Market Day report. How about we jump into the markets? We're trading now, and we're trading on some news of a flash sale. 155,000 metric tons sold overnight, reported by USDA, but the corn market not really reacting to that yet. 424 and a quarter on December. That's a half penny lower, now 3/4 of a cent lower as it ticks to 424. Deferreds are in the red as well. Another flash sale reported on soybeans, 172,000 metric tons, and unknown destinations. So, i.e., could that be China? November, 1032 and a half. That's off 5.25 lower on the January and the March as they now all tick down 5 cents. Wheat market, let's start in Chicago in December, up 2.25, 592. The July 634 and a half. It's a penny 3/4 higher. What about hard red? Up 3/4 of a penny on December at 598 3/4. It's the only contract that doesn't have a 6 handle on it. July at 632 is a tick higher. Spring wheat, penny and a quarter higher for the December, 639 3/4. Most of the deferreds are higher, and the cotton market here as we start the morning, December, 73.91. It's 64 higher. Tommy Grisafi's with Advanced Trading. Tommy, let's start with something I didn't mention, and that's Treasury yields.
Yeah, we got a lot going on. 10-year yield 4.0, and you got to be asking, how could that happen? The unemployment number released Friday at 7:30 came out hot, meaning the economy's good. Employment went down. America's creating jobs. Get all the political rhetoric out of it. Now, I don't know if you need 3 jobs to make a living or anything else, but the bond market was selling off. When I say bonds were selling off, treasuries were going higher. Briefly overnight, 2s and 10s were inverted again. 2-year yields were a little higher than 10s, both trading right now 3.99, 4%, call it 4 even money. So 2s and 10s, same price. That's interesting because how is the Fed lowering rates, and how are they going to continue to lower rates? We've taken the half-point rate cut off for next meeting. We have a quarter-point rate cut maybe figured in. These are the betting people, like how you get a line on a game, say like Vanderbilt, Alabama. They were a little wrong on that line. Congrats, Vanderbilt. But nonetheless, the line on a rate cut is only a quarter, if that. The economy is hot, and you're seeing that in other markets, Tony.
Yeah, and, I look at some of the other markets that we call our outside markets. Propane, we've seen a rally there, and obviously crude, 6-week highs.
Yeah, big move in crude. They're going to have to shut. This storm's a monster coming through the Gulf. You're going to see a little disruption in energy. At first, we'll use a massive amount of energy with people trying to travel to safe places. Then we're going to close for a few days, and then we won't use those energies. We won't have those flights. Flights will be canceled. People won't be on the road. We'll be sheltering in place. It has been close to over 80 years, I believe, since a storm of this significance hit the Tampa Bay area. And I got news for you. Tampa Bay didn't look anything like it does now 80 years ago. So everyone in Florida, please be safe. Don't hang up on this show and get to safety. Get some gas, water, all the goodies. Hey, real quick shout out. Speaking of safety, we had wildfires in western North Dakota. Terrible wildfires in western North Dakota. So this drought, this pattern of these Gulf storms is bringing all this energy up to the Gulf, and it's leaving the upper Midwest abnormally hot and dry. As you see, we're going to have 80 degrees this week in North Dakota. That, Tony, is going to shut down the boys and girls who are in sugar beet harvest. All our good friends at Crystal Sugar going to have to take a break at noon. We can't get those beets out of the ground if they're hot. Back to you.
Tommy, great point there. And you mentioned the dryness and that drought moving back in, and it's a perfect segue. We'll come back and talk about this, but a perfect segue into why we have higher beef prices. Market Day report continues in a moment. Market Day report. Welcome back. We're talking livestock futures, and let's start with live cattle as we open the livestock markets here. And December at 187 even. That's unchanged. February also unchanged. April and June lower. I want to bring up real quick a 6-month a view of the chart of live cattle, and you can kind of see that dip we took in summer and then have started working our way back up. I wanted to kind of show that back through April and May, how we started that run up, and it was in part due to tighter inventories of cattle. We'll bring back in Tommy Grisafi in just a moment. Feeder cattle, November 7 cents higher, 249.35. January up 22 at 244.60. And the hogs, as we start the morning, dime lower on October. Most active is December, 76 1/4. It's a dime higher. All right, let's bring back in Tommy Grisafi, Advanced Trading. And in the last segment, you talked about the wildfires in the western portion of the Dakotas. That dryness is all the way down into Mexico, and that's really what led to tighter beef supplies.
Absolutely. It's leading to a lot of combine fires too. So weather changes quickly. We could have big rains. Remember the big rains of summer. Then all of a sudden, when it doesn't rain for 4 weeks, 6 weeks, and we have abnormal heat like we've had due to these hurricane storms pushing up all that moisture, it's really amazing how weather affects markets, whether it be natural gas or cattle. Interesting thing on the cattle board to point out, and I don't know what to make of it, but the first 4 months are all within $1 of each other. Pick your flavor. They're all 187, 188. Not quite the same looking curve in hogs. As you know, we have big seasonal highs and lows in price in the hog market. But last week, the live cattle and the feeder cattle were the little engine that could. Just kept going up. You could buy dips, sell rips until you can't. Folks I talk to say get hedged, get protected. We're hitting that resistance. If we go through it, fine, but at least have a floor set. Back to you, Tony.
So you mentioned the hogs. Let's look at that one on the chart as well. And again, we saw that dip as we headed into summer, and another little dip back there in August, but hogs just continue to perform. Could we see that continue into 2025?
Absolutely. And of the proteins, pork is by far one of the more affordable ones. We used to think chicken was affordable, and it's not quite the case anymore. I noticed that definitely the pork case is where you get the value. So if I got to feed a bunch of people, a nice pork loin it is on the Traeger, and away we go.
Well, Tommy, always good to have you here. Have a great afternoon. Tommy Grisafi with Advanced Trading. And if you're going to cook it, he mentioned the Traeger. I don't have Traeger pellet prices handy, but if you're like me and you just have to fire it up when you're right there, you don't have time to get the grill really going with charcoal, I have to use propane. Propane up 24.7%. And this is week over week, 12.4% higher month over month.